Are you ready to dive into the world of financing and understand its crucial role in society? In this video, we'll take a closer look at how financing can be used to fund a variety of endeavors, from buying a house to expanding a business. We'll provide examples of financing on a local and global scale and explore the different types of financing available, including equity financing and debt financing. By the end of this video, you'll have a thorough understanding of financing and how it can help you achieve your personal and professional goals. So grab a seat and let's get started. Financing means getting money for something specific, like starting or running a business, making an investment, or paying for personal expenses. It is an important part of both global and local societies because it helps people, organizations, and governments get the money they need to reach their goals. On a small scale, you can see financing in everyday life. For example, a young couple might want to buy a house but need money to do so. They could do this by getting a mortgage, which is a type of loan used to buy real estate. In this situation, the couple would work with a lender, like a bank, to find out how much they can borrow based on their income and credit history. Then, the lender would give the couple the money they needed to buy the house. The couple would pay back the loan, plus interest, over a set amount of time. Financing is an important part of the global economy as a whole. For example, governments might want to borrow money to pay for building roads, bridges, and airports. They might do this by issuing bonds, which are basically IOUs that can be bought and sold on financial markets. When an investor buys a bond, they are giving the government money in exchange for interest payments and the return of their original investment when the bond matures. Another example of global financing is when a company needs money to grow its business or make new products. They could do this by selling ownership stakes in the company to investors in exchange for cash. On the other hand, they could use debt financing, like governments do, by taking out loans or selling bonds. Financing is a key part of helping people, organizations, and governments get the resources they need to reach their goals, both locally and globally. It makes it possible for people to start businesses, save for the future, and fund a wide range of projects and initiatives, all of which help the economy and well-being of society as a whole. In addition to these examples, it is important to think about the different ways that people, organizations, and governments can get money. One of these types of financing is equity financing, which means getting money by selling investors' ownership stakes in a business. This can be done by giving out stocks or shares, which give the holder a part of the company's ownership and the right to a share of the company's profits and to vote. For example, if a new company wants to raise money to keep running and grow, it might give investors shares of stock in exchange for money. The investors would then become shareholders in the company. As shareholders, they would be able to get a share of the company's profits and have a say in how the company runs. Equity financing is a way for a company to get money without taking on debt, since investors give money in exchange for ownership instead of a loan that has to be paid back. But it also means that the company has to give the investors a share of its ownership and profits. For example, if a company gives 50% of its equity to investors in exchange for money, that means the investors own 50% of the company and are entitled to a share of its profits in proportion to their ownership stake. In contrast, debt financing is borrowing money to fund a venture or project. To achieve this, one may get loans from banks or other financial institutions or issue bonds, which are essentially IOUs that can be traded on financial markets. For instance, if a business wants to grow and needs money to do so, it might take out a loan from a bank to pay for the growth. The loan would have an agreed upon interest rate, and the company would have to pay back the money it borrowed plus the interest over a set amount of time. A company could also try to borrow money by selling bonds to investors. When an investor buys a bond, they are giving the borrower money and getting interest payments and the principal back when the bond matures. For instance, if a government wants to pay for a big infrastructure project, it might sell bonds to investors in order to get the money it needs. The investors would then get interest payments on the bonds on a regular basis and get their original investment back when the bonds mature. Equity financing and debt financing are both good ways for companies to get money, and the choice of which to use will depend on the needs and goals of the company. Equity financing is a good choice for companies that want to get a lot of money without taking on debt. On the other hand, debt financing is a good choice for companies that want to get money without giving up ownership or can't get equity financing. In the end, the choice between equity financing and debt financing will depend on a number of factors, such as the company's financial needs, its growth potential, and the terms and conditions of the financing options available. Financing means getting money for something specific, like starting or running a business, making an investment, or paying for personal expenses. It is an important part of both global and local societies because it helps people, organizations, and governments get the money they need to reach their goals. Equity financing means selling shares of a company to get money, while debt financing means getting money from somewhere else, usually through loans or bonds. Equity financing and debt financing are both good ways for companies to get money, and the choice of which to use will depend on the needs and goals of the company. Thank you for watching our video on financing. We hope you now have a better understanding of this crucial aspect of modern society and how it can help you achieve your personal and professional goals. And remember, if you ever have any questions about financing or just want to chat about the latest and greatest financial products, we're always here to help. Just don't ask us to explain the concept of a mortgage again. We're still recovering from that headache.